That means for every single minute, every single hour that it does not move significantly closer to your strike price of 180, you're losing value and people are losing interest because it's not going to get there. Everything in this world is working against you. Greed is a motherfucker. Okay? Greed is a motherfucker. It always has been. And there are things where sometimes the best thing you can do is just close your computer and walk away. And the reason I'm going to say this is I know that I'm not the only person who's had to deal with this, and so I'm gonna just talk for a second. Okay. How many times have you been in a play, especially a day trade, where you got in at 9:30 and at 10:30 you're up, 1% on your equity or 20% on your call. And you're like, well, it's so early in the day, this thing's going to keep running. I'll just keep holding. Now it's back to even. And now you're mad at yourself and you're like, well, that was fucking stupid. I'll just sell when it goes back up. And it goes red. And now you buy more of your equity or your option. And then it goes down some more. So you buy more. Then it goes up. Then you break even. Maybe you got lucky enough to break even. And now you're like, okay, just get back to that original 20% gain or 1% gain and I'll get out. And then it falls. Then at the end of the day, you either bag hold it out of spite overnight and then lose everything, or you have to sell for a loss and you spend the rest of the day saying, I'm so fucking stupid, so fucking stupid. Why didn't I just sell when it was up? Why did I have to get greedy? Stop loss. Let the computer do it for you. If you want to get greedy, that's fine, but let the computer knock you out if it's against it. You got to get your emotions away from it. You have to get your emotions out of this or you will fail. I don't care how long you've been doing this. Every time emotions get involved, you lose. Okay? Imagine a hookup, friends with benefits. Someone always catches feelings and then it ruins, okay? Cut it before the feelings get in, all right? Think about that. Now, another one to think about is how many times do you get cocky because you had a W, a W, a W, a W, and then the market flatlines. And you know what? I'm good for the day. I'm up 10% on my entire portfolio on the day. Fucking massive. That's a yearly gain for some people. But you know what? You're bored. Or you see something setting up and you just want one more play. And it's gone. That's why I generally don't actively trade after stream. Every now and then I will. I'll have fun with it. But you know what? Can I be honest with you? I probably lose more often than I win trading after stream. Now, I'll enter positions after stream. That's fine. Like long positions or swing positions. Like yesterday, I bought my T-Mobile shares yesterday after stream because I wanted to wait until the end of the day to see if there was a sell-off or not. So the reason, but what if it hits your stop loss, kicks you out, and then shoots up 20%? This is why I just like stop losses. There's a saying, I think it was Vin Scully who said it. It's called loss aversion. Okay. The actual quote that sums this up the most was Vin Scully, for those of you guys who are aware of baseball, okay? And he wrote, or he said, losing feels worse than winning feels good. How does that correlate to what you just said to me? You will psychologically remember the times where your stop loss kicked you out and then it ran way more than when your stop loss kicked you out and then it dumped. Our brains are not set up to say, holy shit, that saved my ass. How many times have you guys seen me sell something and then it fucking dies? No, because we don't make a big deal out of that. It's just like, oh, that was a good sell, moving on. But when I sell and it moons, it's same time tomorrow. Oh shit, blah, 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 blah. It's psychology. We always want a little more. We're always feeling of FOMO. We're always upset. But you know what? Do you know how many more times this has happened than this has happened, but you only remember this? You don't remember these. You don't remember these. You only remember these. So, for example, Techno Queen, you were like 3 stop losses hit today, and then they ran afterwards. Sure. So you missed out on a couple bucks. But if you didn't set a stop loss, and it fucking fell to the ground, you could have given up an entire week's worth of gains. So you would have given up real money rather than missed out on potential money. I told you guys all the time. Somebody said no one ever loses taking profits. Yeah, that's bullshit. Because you could win 9 out of 10 trades, and you could have 5% wins out of 9, and then you're 45% up. And the one loss you let ride, the one loss you drop 50% on, guess what? You're negative 5%. It doesn't fucking matter if you went 9 out of 10. As a new trader, an experienced trader, or a long-term trader, you have to protect your capital. And even if a trade, it's better to take good trades than winning trades, right? And what I mean by that is you want good trades to be winning trades, but it's better to take a trade that was a good trade and get out early than YOLO some shit and make a bunch of money or lose a bunch of money, right? Because you're trying to build something. And you have to protect your capital. It's just how it is. Sure, stop losses, it sucks when you sell something and move on. It happens to me every day in real time. But you know what? I would rather go up and get kicked out here, and then the next play, kicked out here, and the next play, kicked out here, and the next play, kicked out here. Even if these stocks went like this, I would rather my portfolio look like that than... y'all's Robinhood accounts. Oh, this trade didn't work out for me. It's a weekly. Well, I'll just hold it overnight and maybe it'll moon tomorrow. Well, tomorrow you just lost all your money on Theta. You just got IV crushed because the market slowed down. Oh, and it moved against you and nobody wants it. It's out of the money. So now it's out of the money. Oh, guess what? Instead of walking away down 30% on your options trade and cutting the loss, you held it overnight. Now you're selling. Now you're down 80%. And then you're so fucking stubborn that you hate watch it and say, you know what? Fuck it. I'll just let it go to zero. And it does go to zero. And now you've lost everything. But we don't remember those. We remember I sold at 30% overnight, some announcement came out, and if I would have held that, I'd be up 100% the next day. Because of some lucky ass shit. So next time, I'm going to hold it and hope that happens again, and then this happens. Not everyone here is stupid. I'm not saying everyone's stupid, but I'm talking to the people who need to hear this. Are you gambling or are you trading? And are you trading or are you investing? What are you doing? What's your plan? Do you have a plan? Are you fucking winging it? I mean, fuck, look what happened to you with SESN 2 days ago. I fucking took it and sold it for a loss, and then the next day it mooned. Shit happens. Shit happens. Now, if you've got a small portion of your portfolio that you want to fucking gamble, go for it. Do whatever the hell you want. If you buy you're asking me, should you hold, because you want to hold overnight, an 827 or a September 3rd. Let's talk 827, right? Let's just say 827 for shits and giggles. Let's say you bought a 170. Let's say you had a few bucks and you wanted to play close to the money. Out of the money, but 5%. Let me tell you why this is a bad idea. If you can't afford to play in the money or further dated, you do not need to play it, okay? I'm going to tell you that right now. Let's say you buy a 180 call that expires on 8/27. Costs you $130, okay? Cheap. Of course it's cheap. It's out of the money. You are 10% out of the money. Now, can Baba move 10% a week? Potentially. It's done it before. The chances are very unlikely. Now let's look at the Greeks. You have a delta of 17. You have a theta of 22. What does that mean? That means tomorrow morning, you lose $22 regardless. So if the stock stays the same today, you already open up the day at 7% loss. Now, that means you need a minimum of $1.50, almost a full 1% open tomorrow just to break back to even, if it stays the same today. Now, remember, you are 10% out of the money. That means for every single minute, every single hour that it does not move significantly closer to your strike price of 180, you're losing value and people are losing interest because it's not going to get there. Everything in this world is working against you. Theta, so your time, value, risk, and the CCP. They all want you to fail. By the way, it just dropped a tiny bit. This is now worth 124 since we've been talking. Why? Because it expires next week. Every 0.1% that it drops is not moving in the right direction for something that is so far out of the money with so little time to get there and so much risk involved. Don't fuck with this, man. I have a rule that says, for me, that says do not hold weeklies overnight. If it expires within 10 days, don't fucking hold that shit overnight. And when you're talking about China, no. You have more potential downside right now than upside at a 4-to-1 ratio right now. What do I mean by that? The upside ratio is either A, value, or B, Jack Ma is alive, and he's not, okay? But what do you have against you? You have tapering going against you. You have China lockdowns. You have China CCP crackdowns. Okay? And you have market fear index. You have 4 things working against you with 1 thing working for you and 4 things trying to see you fail. You're literally
Welcome,
stepping onto a fucking, you were good, you were a starter on your 500 average, winning basketball team in high school, and you just stepped out with the pros. Sure, you might make a shot, but the chances of you getting fucking just shut down, embarrassed, and probably injured are significantly higher. By the way, those contracts are now 121 since we've been talking. You just lost 8% of the value in the 2 minutes we've been talking. Hey, Stocky, I was wondering, what is a general rule for stop loss percent? I've been stopped out of too many trades and losing because of it. Well, it just depends on what type of trade it is and what the volatility is, right? Like generally, if it's something that's like very volatile, I like stop loss percentage, not so much a limit, because that way you're letting it trail, right? Like basically a trailing stop loss. So that way, it goes up with you and it only cuts when it falls below that. So you don't like get hurt in the beginning. So let's say you open up a position and you put a trailing stop loss of 0.5%, right? It's not, you could go down 0.25% and bounce back up and you're fine. But as you go up, it's going to follow behind. So it depends on the type of position you're in. The more volatile the position, the higher the larger the gap the stop loss needs to be, because you could move candles like that. Look what happened to me with Nvidia a couple of weeks ago. My stop loss hit on one candle and then it ran 3,000% in like the next 2 hours. So shit happens, But then again, you only remember the times when the stop loss kicked you out. And you would have made money rather than when it kicked you out and saved you money. So that's something there. What's the 10-10-1 rule? For me, at least when I especially when I was beginning trading, it was 10-10-1, which was never put more than 10% of your trading portfolio in a single position. Never allow yourself to lose more than 10% of that position. Therefore, the most you can lose is 1% of your portfolio. Or you can do, 25-1 if you want, but you got to like separate it up. In other words, you never want to allow yourself to be expose yourself to more than a 1% overall loss. And 1% is a big loss. Most people think to themselves, oh, you only lost 1% today? That's nothing. That's a lot. Okay, that's a lot. Especially when you're trading equities, that's a lot. Well, I'll just make 1% per week for 52 weeks and not, nah, fuck that. That's not how this works. We've been in an unprecedented bull run. Okay, a lot of people are making money. And I'm not saying that I'm not going to be one of those people. And this is something I'm going to tell you. If you ever hear somebody come in and say to you, well, this has been a massive bull run, so your results don't count. Let me know when you've actually traded through a bearish market or when you've been doing this for 25. Bitch, you're living in the past, okay? We've been on a bull run for fucking 10 years. Like, actually, the thing is if you aren't making at least this much during this time, you're actually a shit trader. Stop gatekeeping my fucking results, you old ass, or you fucking bond holding, gold hedging, fucking Berkshire partial share holding bitch. Don't gatekeep me because you haven't traded through a bear market, so your results don't count. Bitch, I've been trading for 15 years and it's been a bull market for 15 years. I'm sorry that your ass can't keep up with me. Okay? You probably still have cable. Fuck out of here.